Welcome to Libertex. Tesla prices have retraced to levels not seen since November 2020, prior to its inclusion into the S&P 500. From over $900 a share in the first month of 2021, Tesla shares have now declined a hair-raising 40% since, currently trading under $560 going into the second trading week of March. Is Tesla severely oversold at this point? And will the stock make a valiant comeback in the coming weeks? Stay until the end of this video, as we'll be covering the latest developments to the Tesla stock price, in addition to an in-depth Tesla technical analysis towards the end. And as always, we'd love it if you join our growing community of traders by hitting the subscribe button and giving us a like to support more videos and content related to Tesla and other growth stocks, cryptocurrency, commodities, and more. So without further ado, let's get into it. Virtually every sector of the markets has been suffering from the violent correction that came towards the end of February and has continued into March. However, one sector that has been more intensely beat down is the electric vehicle, or EV space. Going into the new year, it seemed that almost nothing could diminish the growth trend for the EV sector, and stocks, particularly Tesla, just kept going up. The EV stock rocket ship seems to have encountered a fuel shortage, and Tesla is taking the brunt of the heat. In fact, Tesla broke a record. No stock has ever, in the history of equities markets, lost as much value over the course of just 6 weeks than Tesla, at a staggering decline of over $305 billion. As traders can attest, Tesla is no stranger to volatility, and has seen some pretty big pullbacks in the past that have so far been countered with rapid recoveries and advances to all-time highs. In September of 2020, Tesla lost over $185 billion of its valuation, but managed to win it all back and then some, adding over $400 billion in new value in the successive months. Despite this, with where Tesla currently sits, it will need to recover 56% of its share price to get back to its January highs near $900 a share. So what caused this dramatic of a pullback? Well, in addition to the overarching market correction, Tesla shares went into freefall largely due to the uncertainties surrounding the accuracy of its valuation. With the prices Tesla was sitting at in January, Tesla would need to be valued at $2.2 trillion by 2031 to generate a return of roughly 10% for shareholders each year. At the current levels, the 10-year estimation has been lowered to roughly $1.5 trillion by 2031, which would mean annual earnings would need to get to around $48 billion. Tesla's 2020 profits of $720 million would therefore have to grow by about 50% each year to get here. While many institutions hold reservations about this, some are averaging down and increasing both their stake and price targets for Tesla. Cathie Woods, the eccentric pioneer of the disruptive innovation ETF, ARK Invest, came out with a new price target of $1,400 a share within 5 years. In addition to valuation disruptions and the correction, the EV sector has been embraced by a new wave of potential competitors for Tesla, including Lucid Motors, NIO, and even Ford and Volkswagen wrapping up EV production to get in on the action. There are also concerns that production will be handicapped next quarter due to fuel cell shortages that may sideline growth in the short to mid-term. Furthermore, some are anxious about Tesla's heavy advancement into Bitcoin. All these are catalysts that have come into play recently, significantly bringing down the stock price. Let's jump into the technical analysis to get a better understanding of the new resistance and support levels for Tesla and where Tesla could be primed to go from here. Alright, so we are now in the Libertex terminal looking at the 30-minute technical chart for Tesla. And if we take a look at the recent period, we can see the scale to which Tesla has sold off. And it's clear that Tesla has really taken a beating as of late. So if we jump in, we could see that around Friday, March 5th, Tesla did manage to make a bit of a dead cat bounce off of a low key point of resistance, right around $570. And what we are really wanting to watch for the short term is whether Tesla manages to hold above this and continue in sort of a stair-step direction towards the next point of real key resistance that can be found at the 50-period moving average, right around $640. If we do get to this move, it may come with increased optimism entering the markets, especially now that there are new stimulus check developments, but traders should be monitoring this area before looking to make a bigger move to recover into the green. If Tesla does manage to come back to this $570 level of support and fails to consolidate to get a move back to the upside, the next level of support we need to be keeping an eye on, especially for traders who are looking to set up stop losses, can be found right around the $540 level. It's clear there's a lot of panic selling going on in the overall market in the middle of March, where we are now. So trading Tesla in the short term can come with a high degree of risk, as it is such a volatile stock to begin with. Will you be buying Tesla at the current prices? Do you think Tesla will continue crashing or make a sharp recovery back to previous highs? Let us know your thoughts and whether you'll be trading Tesla this month in the comments to join the conversation with our analysts. And remember, if you'd like to trade Tesla and get in on the current price action, head over to libertex.com today and set up a free account via the links in the description. We hope to see you over at Libertex and wish you a great month of trading. Thanks for watching and see you next time.